US stocks extend losses as Wall Street's post-election rally loses steam. The Eurozone beats growth expectations, but industrial woes persist. Can this recovery hold steady? And we find out how technology drives economic growth as more than 15,000 people gather in Cape Town to tackle Africa's digital divide. Hello, I'm Taiba Aiden with the latest business and finance news here on TRT World. US stock futures inched lower on Friday following a losing day on Wall Street as the post-election rally continued to show signs of fizzling out. It also follows comments from the US Federal Reserve Chairman Jerome Powell that the central bank is in no rush to cut rates. Powell pointed out that strong US economic growth would allow policymakers to take their time in deciding how far and how fast they should lower interest rates. So-called Trump trades also lost steam as the market rally cooled. Tesla tumbled 5.8%, while the small-cap benchmark Russell 2000 dropped more than 1%, underperforming the major averages. Let's get more on this now with Naeem Aslam in London. He's Chief Investment Officer at Zay Capital Markets. Thanks for being with us, Naeem. Now, financial markets greeted Trump's election victory with a blistering rally. Why has it lost momentum?
Thanks for having me. I think, as you correctly pointed out, look, the rally has been going on for a while, and it was very practical and very normal. It is very, very normal for investors to take some profit after such a stellar rally. Now, why this is really happening right now? For two reasons. Number one, of course, the data, because that is one of the most important thing after election. This week, we saw the US CPI numbers coming out hotter than the forecast. That has made traders think back towards the main fundamentals which were very much driving the market's price action. And secondly, there's also this stance, this narrative, these comments coming from the Federal Reserve Chairman, which you pointed out that, look, we are under no pressure to lower the interest rate as the market is expecting. We will do what the data will tell us, and everything is very much market data dependent. The inflation number has given a very clear message to the Federal Reserve, that is, the war against inflation isn't over yet. So this is what taking the toll on the market.
Right, and so-called Trump trades, which had skyrocketed in the past week, are also down. Are investors just taking a breather, or is there more to it?
No, this is completely just taking profit, booking those solid gains on those particular stocks, such as Tesla, that we have seen since post-election. I think the fundamentals for these particular companies have improved after Trump being in the office in terms of the tax, in terms of their global growth, in terms of their supply chain. So we are still very much positive with the view that any retracement in these particular companies continue to remain an opportunity to invest.
Right, and the dollar, on the other hand, is holding on to gains against its peers. Give us more insight into that.
Yeah, this is really interesting because with Trump back in the office, this was very much expected from many investors and especially from smart money. Why? Because one of the things that he was going to do was that, yes, I am going to reposition the dollar's position in the global arena, because dollar was losing momentum because obviously the countries which were under sanctions, they found another way to avoid the dollar denominated system. So now with Trump being back in the office, we do see that strength coming back. However, I am a bit skeptical of that particular strength. The reason for that is because Trump is likely to influence the Federal Reserve, their decision, and that means that we could potentially see more aggressiveness in terms of the interest rate cuts from the Federal Reserve. And if that happens, the current strength in the dollar will not last.
Okay, Naeem Aslam, we will have to leave it there. Thank you very much for that analysis.
Thank you, Barry.
Now it's good news for the Eurozone as employment rose more than expected last quarter and the economy expanded at a respectable pace. These figures are keeping alive hopes for a soft landing after more than a year of near stagnation. Randolph Nogle reports.
The Eurozone's GDP grew by 0.4% quarter-on-quarter from July to September in 2024, marking its fastest pace in 2 years and exceeding expectations of 0.2%. Ireland's unpredictable GDP growth, heavily impacted by multinational corporations, significantly inflated the Eurozone's overall growth figure. France's 0.4% growth in the third quarter was likely aided by Olympic-related spending. Germany narrowly avoided a recession with a 0.2% GDP increase in the third quarter, driven by higher government and household spending, surprising analysts who'd predicted a contraction. Spain posted a strong performance with 0.8% growth, boosted by EU recovery funds. Italy saw no GDP growth in the third quarter, highlighting economic challenges. Eurozone employment grew by 0.2% on the third quarter, twice as fast as predicted. While employment growth remains relatively weak, the figures may still ease fears that a downturn in the jobs market could drag the bloc into recession. But high interest rates, shrinking corporate margins, and weak private consumption are all adding to the negative news flow. Eurozone industrial production fell more than expected, 2% in September, indicating that a long-expected recovery could be even further delayed.
Let's get more analysis on this now from Francesco Rizzuto, Professor of European Law at Liverpool Hope University. Good to have you with us, Professor. Now, the Eurozone economy has been struggling to pick itself up in recent years. What's helped boost the bloc this quarter?
Well, I think, good morning, by the way, I think that the gradual reduction in interest rates has undoubtedly helped. It's boosted a little bit consumer confidence, I guess. And those are really the explanations. And also, of course, smart spending. You actually, in your report, noted that Spain had grown by 0.8% in the last quarter because it's actually seeing the fruits of the expenditure that it's made on high-tech infrastructure and so on because of EU money, whereas Italy, zero growth because it hasn't done that particularly well. So in a nutshell, I think that a little bit of consumer confidence, remember the summer figures, people spending a little bit more during the holidays, and a reduction in interest rates are the two factors that explain that, really.
And how does this growth impact overall economic stability, given stagnation in countries like Italy, as you mentioned? I
don't think we should be celebrating too quickly. Something's going to happen in January. Trump and the fear that he's going to make a significant dent in our ability to grow if he really does put 10 to 20% tariffs on EU exports to the States. Retaliation won't solve that problem. I actually think that the future is gloomy. Okay, the central bank may lower interest rates by another 0.25% as long as inflation, and those figures should be out today, I believe, as long as inflation doesn't do something unexpected, i.e. go significantly over 2%, we might see a drop of another 0.25%. That'll help. But I think Europe really needs to economically deal with its really poor productivity growth relative to the United States. I think what is really far more instructive and useful for EU policymakers and economic policymakers, as well as observers, is to actually take a read of the IMF report that's just been published on the difference in productivity growth between Europe and the United States. And I think that there we actually see the problems. Low venture capital investment, firms that don't really invest in IT, problems with demographics, and of course, an internal single market that is still fragmented. And I think that, you know, the future, governments really must take notice of what the Draghi report says, which actually allies very well with this IMF report.
All right, Professor Francesco Rizzuto from Liverpool Hope University, thank you very much for joining us.
Pleasure. Good morning.
Now a quick look at some of the other top business stories from around the world. China's October retail sales beat forecasts, rising by 4.8% year-on-year, showing positive effects from recent stimulus efforts. Industrial production, however, slightly missed expectations. Meanwhile, the real estate slump worsened with a 10.3% year-to-date decline in investment, the sharpest drop since 2021. The government has ramped up policy measures, including rate cuts and a $1.4 trillion debt relief program to stabilize the economy and address persistent challenges. The UK government has announced financial reforms to boost growth, including a $101 billion mega-fund pension scheme and relaxed risk regulations. Chancellor Rachel Reeves called for modernised policies, stronger EU and US ties, and channeling pensions into infrastructure. Hyundai Motors has appointed Jose Munoz as Chief Executive Officer, making him the first foreigner in this top role. He joined the South Korean carmaker in 2019 as Chief Operating Officer, taking responsibility for its North and South American operations. Hyundai has also named ex-US diplomat Sung Kim as president, as it braces for Donald Trump's second presidency. And Bristol-Myers Squibb has been hit with a $6.7 billion lawsuit from former Celgene shareholders. The drug maker was accused of deliberately delaying federal approval of 3 drugs to avoid paying contingent value rights when it acquired Celgene in 2019 for $74 billion. The move comes after a federal judge abruptly dismissed an earlier version of the case. Still ahead on the programme, AI is transforming global trade, cutting costs and opening market show. Is it reshaping the economy? We'll find out after the break. Artificial intelligence has the potential to help firms create new value from data and reduce trade costs. And as companies look to stay competitive, AI is becoming a critical tool for driving efficiency and opening new opportunities across international markets. Tulay Kalyon Hasnederoğlu explains.
In today's fast-paced world, trade is evolving rapidly, but nothing is transforming the landscape quite like artificial intelligence. From speeding up supply chains to predicting market trends, AI is now a key player in the global economy.
It's about adopting AI, and I think if you're not using AI in your day-to-day work or anything, I think you're quite far behind. And so it's more important now than ever to adopt it and learn how to use AI to enable you. So like, for example, ChatGPT, massive company, but if you're not putting the right prompts or you don't understand how to use it properly, you won't be able to maximize the use of it. So I think AI is here to improve everybody's lives.
AI is no longer a futuristic concept. It's a crucial tool for companies aiming to stay competitive. It can analyze data to forecast trends and streamline logistics, which saves time and money.
For listing optimization, you should definitely have some AI to understand whether your listing is fully optimized or not. Is it capturing the audience? The most important thing for businesses is sales, right? And for us to make sure that we're getting those sales, we need to be able to optimize every part of your business properly.
AI is also helping companies to make smarter, more informed decisions about where to invest and which markets to enter. It looks at patterns and economic indicators to predict which regions are likely to grow and where new opportunities might emerge. As artificial intelligence evolves, experts say it will become even more essential in global trade, helping businesses of all sizes to stay competitive. And as we approach 2025, AI is set to reshape the global economy. And on the consumer side, AI is personalizing shopping experiences. With smart algorithms, retailers can recommend products tailored to individuals, boosting both sales and customer satisfaction. It's a brand new era with AI where technology and commerce go hand in hand, driving innovation and growth across the world. Tülay Kalyon, Haznedaroğlu, TRT World, London.
For more, we're joined by Toby Walsh, Chief Scientist at the University of New South Wales AI Institute. He joins us from Cape Town. Good to have you with us, Toby. Now, how is AI currently being used to optimise trade flows and supply chain management?
I've been using it in my own work to help big multinationals more efficiently route their trucks. And what we find is that we can offer them a 15% saving. That's a lot of money in the bottom line. Tens of millions of dollars they're saving each year. But actually, what's also really good is that almost all of that saving is carbon dioxide. It's diesel fuel that they're not spending. And so it's actually not only good for their economy, it's good for the planet.
And with AI making it easier to predict demand patterns, how do you see it affecting global trade dynamics, especially for emerging markets?
I think the general estimate is it's going to add about 15% to the world's GDP. So that's very good news. What I think should be concerning, and it was actually raised in the recent news reports that we just had, is that those benefits are not going to be equally spread. That there are certain countries that are going to profit better from this, in particular US and China, and other countries, even the European bloc, which are being somewhat left behind. And mention again that the Draghi report highlights some of the challenges that even developed economies like those you find in Europe are going to be competitive, and that we won't see winner-take-all markets.
And many believe AI could reduce the costs associated with international trade. What specific areas do you think will see the biggest cost savings?
Well, I think one of the biggest is in logistics, that we do spend a lot of money shipping things around, flying things around, driving things around. And that's actually quite an old-fashioned business. Hasn't actually seen too many benefits yet for computerization. And there's a lot we can do with data to do that more efficiently, to get the goods to the right places at the right time. And it's how often have you been driving down the motorway when you see a truck go in one direction carrying biscuits and another truck going in the other direction carrying biscuits, and you think maybe they should have not sent the two trucks in opposite directions.
And of course, there are concerns that AI could disrupt traditional trade jobs. Do you think this transformation could lead to a net gain or loss in employment within the industry?
That's a great question. I don't think anyone knows the fundamental answer, whether there's, AI, all like cool technologies, is going to help create new jobs, generate new wealth. But equally, it's also going to take some jobs away. We're going to have autonomous trucks. We're going to replace lots of people in the service economy with AI bots that do what those people do now. I don't think we know what the net impact is going to be. We also have to factor in the changing demographics of the world and all of that. What I think is certain, though, in all this uncertainty, is that it's going to be significantly disruptive, and there are going to be winners and losers. And that is something that we're going to have to start worrying about. It's going to start having increasing political import, where we actually have to ensure that we try and lift all the boats with this rising tide that technology is bringing to us.
Toby Walsh from the University of New South Wales AI Institute. Great to have your thoughts. Appreciate your time.
My pleasure.
More than 15,000 people gathered in Cape Town for Africa's premier connectivity event, the Africa Technology Festival. The event aimed to showcase innovative solutions that can help bridge the digital divide and create opportunities for economic growth in Africa. But the continent still lags behind in ensuring widespread access to the internet. Crystal Alderson filed this report.
Africa has a digital problem, and that's created a digital divide. In 2022, barely a third of people in Africa could access the internet. Yet the IMF says the continent's population is booming, and by 2030, half of all new entrants into the global workforce will come from here. And this means there is a massive market to expand businesses and grow economies, from Cape Town to Lagos to Nairobi. Janae Duplessis runs Launch Africa. They've supported and funded over 150 African startups in 25 countries. He says innovative funding models are crucial for expanding Africa's digital infrastructure, with both public and private capital needed.
So what we need is more strong government support in order to activate entrepreneurship. Then we need more corporate collaboration in order to work with venture capital funds to solve corporate challenges and digitization so that we can invest in the companies that solve their problems.
Speakers here at AFRICOM say the incredible impact of digital inclusion on Africa's economy can boost annual economic growth and create millions of jobs, lifting over 44 million people out of poverty. They say they are ready to collaborate and chart Africa's next wave of digital innovation to change lives.
Young African entrepreneurs say despite the challenges, they want to see a greater digital focus on education.
So our main focus is making education accessible to every child in Africa. So being given this kind of platform to showcase what we do is really an honor. It's really transformative.
Another key talking point is the technology opportunities in Africa. The African pharmaceutical market was estimated at close to $30 billion in 2023. The US is leading partnerships with African governments to use technology to deal with fake medicines.
One of the things that we're really struck by is there is a challenge in our healthcare system today. Some of it is access to medicine. Some of it is making sure the medicine you do actually receive is legitimate. And we believe through technology, we can help address that.
But Africa is not the only focus here. Gaza Sky Geeks is the first tech hub in Gaza and has trained over 50,000 young people in tech. Currently based in the West Bank, all 3 offices have been destroyed in Gaza. Rand Safi from Gaza Geeks offers hope to thousands of Palestinians by offering them online training and courses.
I think basically for Palestinians, hope is your only choice, right? So basically at Gaza Sky Geeks, even during this horrific time with everything that is happening to our community in Gaza, we have messages from our community reaching out. We have participants who are actually joining our trainings.
Safi says Gaza Sky Geeks has trained thousands of young people in Gaza and is now appealing to global technology firms here to hire Palestinians to work remotely and offer them some hope. Crystal Audison, TRT World, Cape Town.
War has completely changed daily life for the people of Gaza and decimated its infrastructure. A UN report highlights Israel denying residents the basic necessities of life. Nizar Sadawi reports on the enclave's water scarcity.
Gaza's Khan Yunis, once a symbol of resilience, now stands on the brink. 4 major water tanks, each holding 20,000 cubic meters, are now empty. 40 of its 44 wells run silent, 70% of the transmission lines are destroyed, and all 26 desalination plants are out of service. So for the people there, water has become as scarce as peace.
Our biggest challenge is the lack of fuel needed to run water wells and pumps for residents. Most of our equipment was destroyed during the Israeli attack on Khan Yunis last April, which damaged over 24 water and sewage vehicles, as well as the infrastructure.
With no power to run the pumps, the struggle intensifies. 3 power generators that once breathed life into the city's water supply now sit useless, and in total, 300 kilometers of water networks have been destroyed. For the families here, securing water is no longer just a grinding daily task, but a battle for survival.
I've developed diabetes and high blood pressure from constant stress of finding water. Every night we worry about how we will get water the next day. There's a real struggle to find affordable jerry cans or tools, especially when they wear out or leak.
Across Gaza, especially in Khan Yunis, long lines of men, women and children stretch under the harsh sun or in cold weather, waiting and hoping.
To get a single bottle of water, we have to walk 1 or 2 kilometers, and the water is contaminated. You can see many people here getting sick because of it.
In these long lines stands 14-year-old Saqar Muhammad, who once went to school, now a destroyed shelter. Like the rest of Gaza's children, his dreams have been replaced by the harsh reality of survival.
Every morning at 7, I wait at least 2 hours in line for water, whether for washing or drinking. Everyone is suffering from the crisis, waiting in long queues. We need at least 10 gallons as a big family, and I'm the only one who can get it.
As people wait in line for water, there are many others. One for bread, another for medicine, each one just as long and just as desperate. Gaza has lived with a water crisis for many years, shaped by relentless wars and the stranglehold of Israel's blockade. But before this war, there was a glimmer of hope. But now, even that is fading away. Nizar Sadawi, TRT World.
Well, that's all your business news for now. Thanks for watching. The Newsmakers is next.